Oh, hello, Dan Casey, Panic Proof Retirement, coming to you from the Panic Proof Retirement Studios, or a room in my office out here in Bloomfield Hills, otherwise known as. And you can tell I barely know what I'm doing here. So doing live, this is, I think, my second one I've done live, but I thought today would be a really good one. And again, feel free to ask questions if we are live. And hopefully I'll see them and hopefully I'll be able to answer them. I don't know, but we'll see. But the whole idea, the whole concept is this is I will always be posting this in my private Facebook group, which you can see the QR code is here on the screen. So feel free to do that. Jump in my Facebook group. I will approve you. And then once you're in there, you can ask questions all you want, and I will answer them in there, even do some case studies, maybe with you, customize stuff for you directly. So let's get into this one I wanted to talk to you today about, which is, this is going to sound really scary, the Social Security torpedo tax. Ooh. So what does that mean? It means, so your Social Security is not always taxable, right? Sometimes it can be zero taxable amount, all the way up to the maximum, which is 85%. So what I want to show you right now is an actual tax return. And this is an actual tax return that shows it like perfectly. So I'm going to bring up my pen. Hopefully my pen works this time. It didn't work so well last time. Where this is the Social Security benefits right here. So see this right here? Now, if you go all the way over to the other side of the 1040, that's showing you how much taxable benefits of Social Security there are. So see how the gross is $69,725. But the taxable amount is only $31,000, so a little bit less than half, right? So only 50, let's just say it's 40% of the total Social Security benefits are taxable. But what that means is every additional dollar that comes into that household now is also going to increase the amount of your Social Security benefits being taxable. And that is the Social Security torpedo tax, meaning not so additional taxable income. Obviously, that's going to be taxable, right? All taxable income is taxable, or I wouldn't call it taxable income. So that's causing taxation, but then it's also causing previously tax-free Social Security to become taxable as well. A lot of financial advisors don't know this. They don't account for it, and it can cause a huge problem. I'm going to repeat that just because it's super important. When you're into this point where every dollar of your other additional income is causing Social Security to be taxable, it causes a double whammy, right? So perfect case here. So obviously that is something that we do here at Panic Proof Retirement. When you come see us, is we're going to find out if that's a problem, because when this comes up a lot is everything's fine and dandy until required minimum distributions kick in, right? And then it causes, again, that RMD is obviously going to be taxable, but it's causing more of your Social Security to be taxable too, which is, again, another reason why Roth conversions are so well discussed, but sometimes not understood because, again, I'll get from CPAs all the time saying, your client, why are you doing Roth conversions for your client? They don't need it. They're too old or whatever. It can really be a cascading effect. So let me get rid of this, get back to here, and jump into this one right here. So this is a Social Security taxation calculator that I created that I kind of run through all my clients. Let me do a quick rundown before I go into it. So obviously this part right here is whether you're single or married filing jointly, your age. I put in here how much of your Social Security benefits you're getting, and then all other taxable income. That could be a pension. That could be dividends being kicked off by a non-retirement account. It could be capital gains. It could be rental income, right? Anything that's additional taxable income could mess with this. Just keep your eye on this chart. That's going to show you how much estimated taxes that you're going to have to pay. This one is how much of your Social Security benefits are taxable. So either 0, 50%, or again, the 85% max. And then the standard deduction and how that kind of affects everything as well. And again, another rule of thumb is if all your additional income, or this guy right here, is less than the standard deduction, then in general, it's going to allow your Social Security benefits to be tax-free, right? So it doesn't always work, but I'd say 90% of the time, that's what it works. And that really breaks down the Social Security provisional tax issues in a really easy to understand way. If additional income above and beyond Social Security is less than the standard deduction, odds are you're going to be paying no taxes on anything. Standard deduction will offset the other income, which makes Social Security completely tax-free. So if we adjust this, let's just say Social Security benefits is, well, let's do married filing jointly first. Social Security benefits is $50,000. That's pretty common for a married couple. And then we've got taxable income of, say, $30,000. Perfect example. Okay. Now, if you look up here, we've got the Social Security. About 30% of it's taxable, right? So only $14,500 is even taxable Social Security. And under this scenario, you can see you're not paying any taxes. Federal taxes, of course, right? There's no taxes being paid. So why? The standard deduction is offsetting this $30,000, which is making your $48,000 Social Security tax-free. We can probably look at that better if I break down this Social Security taxation right here. And that shows you right now the provisional income, taxable portion of Social Security, and that plus the other income is being offset by the standard deduction. However, let me now scroll up, pay very close attention to this guy right here. I'm going to scroll up because this came up when a client wanted more money to fix up something. I don't know, add a deck or something like that. And then you can see if I start to scroll that, boom, look at the estimated taxes start kicking in. And I could take out just an additional 20 grand, right? I jumped from 30,000 of additional income to 50. And boom, I'm now paying $3,800 in taxes on just that 20% or that $20,000 extra withdrawal. Welcome to the Social Security torpedo tax. Okay, so again, that's one of many things that we go through when you and I chat. So Social Security torpedo tax, write it down. Try to Google it if you can. Kind of confusing. But I hope this helped. And I hope if you join me in the Facebook private group, we can find out if this affects you. Or you can ask all the questions that you want. Okay, let me go back to my studio. I'm going to remove this. And then I'm going to end the stream. And I want to thank everybody for joining me today. If you joined me, I don't know if